Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While markets keenly await to hear Mr. Powell at the Jackson Hole Summit, what are the key things to keep in mind? We discussed the BLS job number revisions, which came lower, unemployment rate, which has been consistently rising for a few months, and inflation, which seems to be subdued for the few months. Economy still seems to be holding on pretty well in the US despite such challenges. Meanwhile, dollar index broke its January lows, yields remain subdued, and equities seem to be doing okay. Good morning, JK. Your thoughts on markets ahead of Powell's speech, which definitely seems to be crucial now.
Yeah, good morning. Yes, we are back to watching some of the key central bankers today. Of course, we already had one central banker speak in the parliament, Mr. Oveda, BOJ governor, who sounded a slightly hawkish, I would say, because he was saying that July rate hike decision was based on Japan's inflation forecast and the risk of inflation overshoot, and also blamed the stock market plunge on US economy slowdown rather than interest rate hike. He was actually justifying an interest rate hike and also not ruling out further actions depending upon the conditions in Japan. And and also he was even saying that even the Nikkei plunge was more on US economy, coming, seemed to be slowing down. And he also said that they will be narrowing down the range of expected neutral rate while monitoring how higher interest rates will affect the economy. So I would say that BOJ is still open to more hikes in the coming months, but yes, they will go in a measured way because they also said that FX volatility could affect their forecasts and determine their policy path. That's one that is over. One central bank who is over. And of course, we had a few members of the Fed yesterday also speaking in favor of generally adding to the sense that a rate cut is coming in September 17-18 policy meeting. Just leaving the questions about the size of that first cut and also the pace of subsequent easing. Now we are moving towards the key event of the week, that is Jackson Hole speech by Powell tonight. And that is seen as kind of make or break moment for the markets because that will determine also the economy's fate. So Powell is wanting to bring inflation down without a recession. And that's what he has been, shifting his focus in the sense that when he was saying that they have less confidence on inflation remaining sustainably at the target of 2%. He was not so much worried about the economy slowing down, but then after the last few data points and also in the last meeting on July 31st, in July, he actually mentioned that the economy balance is tilting more towards watching the economy also, and employment sector cooling off is something that has come to his focus as well. Therefore, he will be definitely in a way indicating a cut in the coming meeting. Yes, although some officials are nervous that the rate cuts can stoke a new price pressures, he will probably keep his options open when he speaks, particularly about the future rate hikes. So that's what the market is now hinged upon. If he does say September cut on the table and future rate cuts are not out of the reckoning, then it might keep the currency supported. Otherwise, if he plays the caution card about future rate cuts and the extent of rate cuts this year, and I think dollar is in a position from where it can actually recover quite a bit. Even the yields have shown that they are not able to hold on to the lows that was seen in the last week, and so I feel market is a bit overly positioned for a dovish Powell, and that can correct a bit if if he sounds otherwise. But on the markets, otherwise, yesterday we did have with the weekly jobless claims that came slightly higher, but well within the normal range that we have seen over the past several months. The 245,000 number that we had seen a few weeks back, that is seen as an aberration, and then we are back into the normal numbers between 225 and 235, and so many people see that higher number previously as caused by temporary dislocation of labor due to the cyclone and the storms. So that I think still the labor market is still on a watch. Crucial will be after Powell. The crucial will be the next unemployment report that comes on September 6th. And before that, we'll also have the PCE core inflation next week along with the GDP. So a lot to look forward to before market decides, or market has a definite conclusion about the direction in which the US economy is moving towards. So I think not easy to presume that the dollar downtrend will immediately continue. Again, like I said yesterday, I favor a bounce in the dollar from these levels, and maybe a bit overdone on the downside right now. Speaking of dollar rupee again went into its now new normal level of 83, 95, 97, where it traded most of the day yesterday after dollar recovered from 83.75 2 days back, and good amount of buying from the PSU banks at lower levels to on behalf of RBI to replenish their reserves. But then when the market started buying after 83.90, good demand was seen, and then they came on the other side offering dollars ahead of 84. So we are back into the same familiar play. Possibly now the range narrows down to 83.90 and 83.97 for some time. At least today, that should be the case because of the event that is lined up. So we'll see on Monday again after the effect of what Powell says will be felt. Thank you.
Thank you, JK. And just to quickly summarize, ahead of the Jackson Hole speech of Mr. Powell, a few Fed members who have spoken earlier this week definitely seem to be favoring a rate cut. And even Mr. Powell in his previous speeches has made measured talk on the balance of the Fed's dual mandate. And now the job market situation definitely seems to be in his focus. Given the scenario, markets seem to be overly positioned for a dovish Powell, and maybe there can be a bounce in the dollar index as yields also fail to make a move lower. So that's something markets will be keenly tracking. And today is also the last day of the week, so maybe some sort of profit taking also on the cards. For USDINR, it went into its own good amount of buying on the lower side and now trades above rupees 83.90. So familiar ranges and nothing new to write home about. That's it from us today. Thanks for listening. Have a very good weekend and tune in on Monday for the latest in the financial markets.